I recently had the chance to test drive a Lucid Air Grand Touring Edition, and in about 25 minutes, I was able to easily tell why Lucid is struggling to sell this vehicle. Now, in some people's minds, the word struggling is probably a little too strong, because 5 years ago, who would have expected a luxury EV automaker from the ground up like this to start production? And the fact that this company is now signing contracts with the likes of Formula E and Aston Martin is certainly a very impressive feat. However, as we all know, folks, the EV industry today is cutthroat, which means some of the recent delivery data for the second quarter that just came out for Lucid Motors is shedding light on how this company is struggling just a little bit more than its competition in recovering from the EV sales slump. So, why exactly is that the case? How does it tie into Lucid's financial future? And what exactly this company holds in long-term opportunity if it executes properly? Well, folks, those questions are exactly what I'm going to address in this video. But as usual, folks, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. In the second quarter of 2023, Lucid Motors produced around 2,170 vehicles while delivering around 1,400 of them to customers. This fell way short of analyst estimates who had expected deliveries of 2,000 while production to grow year over year. This right here, folks, is the number one concern that is plaguing the image around Lucid Motors. Even though from a customer experience standpoint, the number of deliveries or production numbers that a company achieves really doesn't matter. The fact that the EV industry is very high cash burn and other automakers like Rivian and Tesla have performed quite well in their own first few years really means Lucid has some stiff competition to face. As you can see, for the first time on a quarter-to-quarter basis, Lucid saw its deliveries decline. That's in contrast to Rivian and Tesla's deliveries having increased, where this chart is comparing Tesla from its own start of production. Based on Lucid's most recent quarterly numbers, production actually declined on a quarter-over-quarter basis by 6%, whereas deliveries obviously remained around the same. And although on the surface these numbers obviously look quite bad, there could be some real reasons for why this is happening, not only to do with the product lineup. And first things first, folks, the reality is Lucid is selling to an extremely niche market. This isn't necessarily a problem with the product of the company, their technology, or their production ability, because let's be honest, they have more than a $5 billion facility already up and running in the southern Arizona desert, but it has more to do with the fact that luxury customers, those who are willing to spend $100,000 to $200,000 on a luxury vehicle, simply don't have the money to spend it right now. The fact of the matter is that at least in North America, the personal savings rate for households is at an all-time low. And although many people have a lot of savings saved up from the pandemic and stimulus checks, high interest rates have simply killed the demand for credit and people spending more money. That is clearly reflected through the inflation report that we just received a few days ago that showed CPI headline falling to 3% from being at 9% just 12 months ago. Not to mention the fact that the producer price index, another economic metric for the United States, fell to 0.1% after having been at more than 12% in the middle of last year. I don't know about you folks, but that for me is a pretty big red flag when it comes to consumer spending. Inflation coming down is a sign of economic slowdowns, and economic slowdowns tend to affect those tangible products that have a luxury taste to them. Most people are now going to spend money on the essentials, whether that be a Toyota Corolla or a Toyota RAV4, and not necessarily a multi-$100,000 luxury electric vehicle. especially given the fact that the EV infrastructure is still a concern on the mind of most car buyers. And believe it or not, Lucid themselves can see this coming. They have the upfront seat to how deliveries could perform over the next 12 months through reservations, sales orders, and even test drive numbers, which probably happens to be the reason why they slowed down production this month. If you're going to see a sales slump, you have to reduce costs, and this is most likely a big reason why analysts and Wall Street reacted so poorly to this latest delivery report. And guess what, folks? It's not just Lucid that is struggling with luxury EV sales. Porsche Taycan, for example, has seen its sales slump by 35% in the second quarter of this year compared to last year. And yes, even though Tesla beat analyst estimates of production and deliveries for the second quarter of 2023, their Model S and Model X sales, which are their higher-end luxury vehicles, were nowhere near the same as Model 3 or Model Y. As a matter of fact, in the second quarter, they delivered around 19,000 Model S and X vehicles, whereas in the second quarter of last year, they delivered around 16,000, whereas in the second quarter of 2019, before the pandemic, they delivered around the same of 17,000. This means there is barely 5% growth annualized in their Model S and X sales, which, put into perspective with the fact that Lucid grew by around 100% year over year, is a pretty important metric. This tells us that pricing is indeed the most important metric for volume sales, and Lucid is simply in the wrong market to achieve higher volumes. The Tesla Model 3 and Model Y have been selling like crazy, and they've accounted for more than 95% of Tesla's growth and Tesla sales. However, if you take away those vehicles, their actual higher-end luxury vehicles like the S and the X are not so good. And as for Lucid's financial position and their ability to survive this sales slump, the reality is Wall Street is making it out to be much worse than what it actually is. You guys already know my take on this idea that all other EV automakers apart from Tesla are gonna go bankrupt. That is simply not how the automotive industry works. Chances are, in 10 years from now, Rivian, Lucid, Nikola, and all these other startups are still going to be here. It's just that they might be doing different kinds of business based on their current success. As for Lucid, it is still one of the most well-capitalized companies in the space, with cash and cash equivalents sitting at around $2.9 billion. That's in contrast with their total debt, which is around 3.7, with their current debt worth around 1 billion. Although this looks quite poor, if you look at their current assets, which are essentially those assets that they can convert into cash within the next 12 months, it's at around $4 billion, which means they can pay off all their debts for the next 12 months and still have around $3 billion left in the bank. And obviously, with the Saudi investment fund that is backing this company with more than a 60% stake, there's good chances that the company is going to be able to raise a lot of money, particularly with the growth we're seeing in that country. And as for Lucid's operating cash flow, as you can see, it is sitting around negative $800 million. This will most likely continue to go towards the negative because of the insane capacity Lucid has versus the actual production units they're selling. Because, as we all know, operating cash flow is determined by your gross margin. And right now, Lucid's gross margin is very much in the negative because they're simply running at a very low capacity factor for their factory. They need to establish the supply chain and the resources as well as the marketing channels to ensure they can ramp up without losing too much money. Lucid isn't necessarily losing $200,000, $300,000 per vehicle they sell. It's just that their operating and overhead expenses are much higher than the revenue they're currently bringing in. And as is the case with every company on planet Earth, that situation can obviously change. And given the fact that the Lucid Air as a product is actually quite fantastic, there are high hopes that this company can really launch itself going into 2030. They're still one of the only top-tier luxury EV brands that have been built from the ground up, which gives them the agility that no other traditional OEM will ever have. Lucid is undoubtedly at the cutting edge of EV technology. They focus on efficiency, efficiency, and efficiency. The Lucid Air Sapphire, for example, is one of the quickest production cars on planet Earth ever tested by Motor Trend. And the luxury features that you find in one of these vehicles is simply not something you can find in a Tesla or even in a Rivian. At the end of the day, the real game changer for Lucid is going to be to scale up manufacturing and launch a more affordable electric car. And just like Tesla succeeded with the Model 3, chances are they can too. As usual, folks, let me know your thoughts on Lucid's situation down in the comment section below. Do you think this is a company worth owning, worth buying, or will this company even be around in the next 5 years? Thank you very much for watching, and I'll catch you guys in the next one. Take care.